Welcome and thanks for joining us for this webinar on investing in Illinois tax liens. Before we move forward, if you haven't already watched Basics of Tax Lien Investing 101, we strongly recommend that you go back to our homepage and watch that broadcast before moving on to this one. There will be some important information in that one that will apply to this broadcast. Otherwise, let's go ahead and get started. So here we see just your basic everyday Illinois tax lien certificate. We're going to start with this just so we can kind of show you guys some things as we get going here. Certificates are always going to include all the pertinent data that is there for the underlying property. It's going to show what year the taxes were sold, or what year they were payable, the certificate number, the county, the state, the typical legal jargon, the date of the sale, which you can see on this one was December 19th of 2014, the parcel number identifying the property class code. I can tell by looking at the certificate that this is a single-family residential improved parcel, who it was assessed to, the address, the penalty rate, and that's the bid rate that we purchased it at the tax sale, which on this one was 18%, and the amount of the sale of the tax lien, which was $13.1982. Okay, so first a little bit about who I am and who PIP is. I began investing in distressed assets, as I'll call them, because tax liens can eventually become obviously real estate property foreclosures or a traditional type of distressed asset. I started at the age of 23 while bartending full-time in Atlanta, Georgia. 2 years later, I started a tax lien servicer firm. It was just 4 clients, and I believe it was $80,000. And I started that firm with a small loan from my father to get things going. 7 years later, things were going really well, and I ended up selling my model, or the company at the time, to a large Canadian venture capitalist that wanted to get into the tax lien business. There was obviously no non-complete clauses in there, so with a new partner, many of you may have heard the name Don Fullman. Don is now retired, but with my new partner Don, we started Platinum Investment Properties back in 2004. We still just had a handful of clients at that point and a few $100,000 in capital. To date, we now have Platinum Investment Properties Group, which consists of 3 offices, as well as I'm CEO of Vision Tax Lien Services, which more or less handles the institutional side of the business, due diligence, REO offload, that sort of thing for hedge funds and banks. So to date, we have over $150 million in tax default assets or REOs under management between these 2 firms, and we've got over 600 active customers. So we've come a long ways in a fairly short period of time, and we keep growing and growing and growing. So let's go ahead and get started and get into what it is we do. All right, so now we're talking about one of our client favorites, Illinois tax sales. Why is it a client favorite? Because it has some really aggressive terms as far as the penalties are concerned. Maximum bids are 18% penalty on the tax lien amount. What's so nice about that is that if we go to an auction, let's say on a Monday, and we buy a $1,000 lien at 18%, if the homeowner comes in on Tuesday and wants to redeem that tax lien, it's going to cost him $180. You're going to earn that 18% the next day. Granted, that is the maximum penalty, and obviously it is a bid down state. So you're going to have a variance of tax liens between between a bid rate of 10, which would be an annualized of 20%. How it works essentially is if you buy it at 18, every 6 months and 1 day, whatever you bought it for, that penalty rate is going to double. So if you bought it at 18%, in 6 months and 1 day, it becomes 36%. after 12 months becomes 54%, and so on. That carries all the way to the 3-year mark. So after 3 years, you could potentially earn 108% on a bid rate of 18%. Down in the right-hand corner, you've just got a typical tax sale certificate. This is one from an Illinois tax sale. You can see the penalty rate was 18% on this one. You can see the amount of the sale was $13,1982. And then it's just got your typical legal jargon. Looks a lot like a bond. All right, so I'm one of those people that needs to see things illustrated to comprehend what you're telling me in this compounding effect. So here we have an example of how the penalties in Illinois actually work. In the first lien, we see the date sold was December 11th of 2014, and it was redeemed on May 20th of 2015. So it didn't quite make the 6-month run. So basically, we can look at this and say that the bid rate at purchase was 16%. That's how much the bid rate was at the auction when we bought the lien. So we basically bid it down by 2 points. In the next one, it was purchased in December 12th of 2013, so we're actually 2 years in and 5 months. So you can see the compounding effect here. We have 48%, so it actually had, 4 cycles of penalty where that 6-month and 1 day penalty compounding applied. And then the last one you can see again, same as the first one, purchase date, and you can see that the bid rate was 18%. So that's going to compound, obviously. Now it's at 36%. After December 11th of this year, it will be at 54%, and so on. All right, so talking about basic terms of sale. State legislation, as we've talked about before, regulates the amount of time a taxpayer has to redeem. In Illinois, the redemption period is 2 to 2.5 years. As a tax buyer, you can extend the right to redeem to 3 years from the date of purchase. As a rule of thumb, PIP automatically, if you're a client of PIP, automatically extends the right of redemption to 3 years because, again, Illinois is a redemption investor state. In Illinois, you have to petition for the deed prior to the expiration of the redemption period. In a lot of states, you actually wait for the redemption period to expire, and then you petition for deed, or you take that next step of engagement. In Illinois, you actually have to do it a number of months beforehand. Okay, on a number of these slides, basically what we've done is we've taken verbatim from the state legislative statutes and just kind of highlighted the key points of the terms of sale. So here we've highlighted, if an individual or company fails to pay their tax bill within the following calendar year, the treasurer shall make the attempt to notify the property owner in the following month of January via certified mail and newspaper notices. Why is that important? That's important because essentially what they're saying is they start notifying delinquent taxpayers in January, and the sales actually don't commence until October. So there's essentially 10 months of notification going on before they even start to notify the homeowners that the property is going to be sold at tax sale. Taxes shall be auctioned off to investors at an interest rate to be determined in a reverse auction bidding process. The issue with this is they say interest rate here, and then the bottom they say maximum bid rate is 18%, which would reflect a 36% annualized penalty. Again, we stress penalty because it's paid the next day. You invest on a Monday, you bid 18%, it's redeemed on a Tuesday, you earn 18%. You receive the redemption 6 months and 1 day from your Monday tax sale, you receive 36%. So interest rate is not really accurate because it's not broken out throughout the year. It's not prorated. So it's a penalty. It's not an interest. All right, we're jumping back and forth a little bit just because we're going through, again, the verbatim from the Illinois legislative statutes. So tax sale registration is between $250 and $500 per bidder. So that is a cost that you will pay if you want to participate in the tax sale. You have to register at least 10 business days before the sale. That is a biggie. You cannot bid if you are not registered. Registration, we'll show you an example of registration in a minute, but it's basically an application with the county as well as a W-9 form in the name that you're going to be bidding under. After the sale, the tax lien is not redeemed by the owner. The tax buyer must petition the circuit court for a tax deed after first fulfilling all of the legal requirements. In the basics of investing 101, we talked about how a lot of the gurus out there essentially say tax sale investing is so simple and so easy, and all you got to do is kick back, relax, and wait for the money to come back. That's not the case. You actually have some legal processes that are due under very strict guidelines, and if you miss just one of those, the lien doesn't necessarily become void. You just lose some leverages to be able to foreclose when the time comes. Okay, so here's the registration form. Like I said, not much to it. Pretty simple process. You just basically put in who the tax sale purchaser is, who is going to be attending the sale and bidding on behalf of the purchaser, the address where they're going to send everything after the sale, the certificates and all the other paperwork, email address if the list is coming electronically. This particular county is actually requesting a $300 deposit. Most are either $250 or $500, and obviously charging for the tax sale list as well, which is pretty standard. You're going to pay a registration fee as well as a tax sale list fee. The tax sale list can be as expensive as $500 per auction, so something to keep in mind as well. All right, just another certificate for your review. Not much to say about this other than I've already explained to you. You can either move on, or I will let this run for just a few seconds so you guys can take a look and see if you have any questions or whatnot. All right, foreclosure and tax deed process, as well as petition filing and serving notices. Excuse me. As I already mentioned, the extension of the rights to redeem. If you're a client of PIP, that is automatically done because, again, we consider Illinois to be a redemption state. So we want to extend the rights to redeem as long as possible so we can compound that penalty and get as many liens to redeem as we possibly can. And again, as I mentioned, in Illinois, you actually have to engage in certain processes before the redemption period has even expired. As you can see, the legislative branch underlined that it must be taken between 5 and 3 months before the redemption period expires. Okay, I mentioned earlier that there are certain processes during the ownership of the liens that have to be done. This is one of them. This is what we call, or what they call, a take notice. It is a 22-5 form to be specific, and this is done in triplicate and sent to the county, who then sends it to who stamps it, keeps a copy, sends a copy to the owner of record, and sends a copy back to us. So this is essentially what goes to the homeowner, stating that their property has been sold for delinquent taxes, how much it was for, including penalties, the property address, the year the taxes were sold for, etc., etc. This form must be done, or it can certainly hurt the leverage potential of your ability to foreclose later. Okay, so the next 4 slides are strictly frequently asked questions. Every now and then we get one really savvy client that just seems to ask all the right questions. So what I've basically done is this exchange of conversation went back and forth in email about 2 weeks ago, and I thought it was just perfect to throw into the Illinois frequently asked questions slides. So what I'm going to do is I'm just going to stop talking for the next few slides. I'll let them run for about 10 seconds each. All you have to do is hit the pause button on your screen so you can actually read through these yourself. But I think it's best if you read through them rather than my talking through them so you can absorb it more completely. Okay, hopefully most of those frequently asked questions answered your questions. What you're looking at here is essentially just a snapshot of what your investment summary report looks like if you're investing through PIP. It will show the date of the investment, the date of maturation, which will be the date that we engage the foreclosure process if necessary. We have the certificate number, parcel number, the property value. The property value is going to be, because this is tax default real estate, what we use is we use the county assessed value and then we discount that a bit because we figure if the taxes have been neglected, the property is going to be neglected a bit too. So we discount from the tax assessed value. In the state of Illinois, the assessed value is calculated at 1/3 of fair market value. So what we do is we actually reduce that a bit in our calculations. But see, here you can see the redemption dates, the redemption totals, the county fees. That county fee, that $19.54 you see there, that is actually for the notification. The take notice, the 22.5 we spoke about earlier. You don't make any penalties or interest on this fee, but you do get it back when the lien is redeemed. So it'll calculate it all out as the income earned. You've got your interest rates shown there. Something you'll see here that was addressed in the frequently asked questions is fluctuating interest rates. We have one here of 14%, which means we bid 7%. Purpose of having bouncing interest or bouncing penalty rates is because we have to keep our competition off guard. We don't want to become predictable in tax sales. So you're going to see a good weighted average return, but you are also going to see some lower penalty liens. Again, I'll leave this screen up for about 10 seconds so you guys can observe a little more closely, and we'll move on. Okay, so this is just the back end of the previous screen. This is the final tally of that screen. So again, I'll just leave this up for about 10 seconds, let you guys look at it, and we'll continue on. Okay, foreclosure considerations. This is when clients start to not get antsy, but we definitely have to go through an entire re-education process. And we actually have private online broadcasts that we do in a series that are strictly on foreclosing on your liens in Illinois, because it can be an extraordinarily complicated and confusing process. But that's why we're here, is to get you through that process. The first thing that's important to know is that if you have any unredeemed liens, your liens can and will continue to redeem well beyond the right to foreclose timeline. In a lot of states, once the redemption rights have expired, the homeowner can't redeem the property or pay the taxes anymore. That's not the case in Illinois. They can pay the taxes all the way up to and through the foreclosure process up to the last hearing date, and we have seen it happen, of the last hearing date of the foreclosure, or where they ordered the approval for deed. The first phase of foreclosure is reassessment of the property that you own the lien on. There's a reason we do that, and I would like to express this as strongly as possible. We do a due diligence process before the investment on behalf of our clients. However, these are tax default assets, and as I said earlier, if the tax has been neglected, the property has been too. A lot can happen to a property in 3 months, much less 2.5 years. So before we jump into engaging into a foreclosure, we want to get in there, take another look, and make sure that the property we bought at the tax sale is the same property that we're now considering to foreclose on. Foreclosure costs in Illinois will vary from lien to lien. It's not just black and white. It's going to be different for every single property. As a generalization, the average cost could be between 3 to 7 times the original cost of the lien. A tax buyer in Illinois is awarded a clean and insurable title to the property upon a final execution of the deed. That means that there's no quiet title action after you get the deed to the property or title certification. That's done through the foreclosure process. That's also why it can and usually take up to 18 months to finalize the process. We've had some get done in 6 months, but I'd rather be on the long side of things rather than the short side of things to make sure that we're managing the expectations of our clients. In Illinois, we have what are called postable fees and non-postable fees. Postable fees are fees that are associated with foreclosure that are posted to the redemption amount. If the lien is redeemed, the homeowner has to pay those fees. They're going to include things like the clerk's fee to file the petition for tax deed, the publication fees to run the foreclosure notice in the local paper for 90 days. Things like that will be postable fees. Non-postable fee is what they call the professional fees, and they are not applied to the total redemption amount. The professional fees are basically one fee. It's the attorney's fees. So that is not postable to the redemption. Now, we have come up with a plan as of a couple of years ago where clients can engage in all of their foreclosures without risking loss of principal due to this non-postable fee. Essentially what we did is we've brought our attorneys in-house. They are now salaried employees of PIP, and we're able to spread the cost of foreclosure across everybody, and it prevents loss of principal should the lien redeem during the foreclosure process. Okay, so I usually don't include this slide in a introduction to Illinois tax lien investments, but it's good to go ahead and get it out there just so you have good, clean knowledge of what could potentially occur 2.5, 3 years down the road. For those of you that have viewed the Illinois broadcasts in the past, my apologies for hijacking this slide from previous presentations, but it lines everything out pretty well. And quite honestly, as we are recording this, we are ramping up for Illinois, and time is of the essence. So I did steal this slide from a previous presentation. So essentially what this slide does is it outlines potential costs and potential profits should the lien make it through the foreclosure process, or if it is to be redeemed, and sort of outlines what those postable and non-postable fees are going to be. The top one, the foreclosed investment to value ratio is still really good following foreclosure, as is the bottom one. And again, sorry for the fuzzy pictures. I did steal this slide from an earlier presentation. I can't walk you through every single line item here. So again, what I'm going to do is I'm going to give this about 10 seconds, and I'm going to pause. Excuse me, and you guys should pause your screens so you can actually look through this a little closer. So we'll go ahead and do that right now. Okay, so if you did as we recommended and you watched the Basics of Investing 101, you saw this slide already, and you know that this slide represents a Illinois investment that was purchased as a tax lien, went through the 3-year maturation period, redemption period, went through foreclosure, was being rented for a 45% gross return on investment on behalf of our client. She then resold the property for whatever reason she had for $18,000. So the new owner, we called that a secondary market acquisition. The new owner is earning not quite the 45.3%, but still doing very, very well on this rented ROI. And again, just to reemphasize, we are the turnkey servicer. So we are handling all of this on your behalf. So we continue, even after this is REO and you have a cash flowing property, we continue to make this a passive investment for you. Okay, so you are the interest investor or the redemption investor, and you don't want to consider anything for foreclosure. This is obviously something that we have to take into consideration with every client every year. So what do? There are some options that we can consider, and we won't get into detail of those options in this broadcast. But should you not want to foreclose on anything, part of that reassessment process we discussed is also to make the liens more marketable or to uncover issues that would enable us to liquidate the lien by other means. First is to option it to a third party at your cost plus 12%. The second would be to sell the lien on the private secondary market at a cost plus 8%. The secondary market is essentially selling your lien to a property investor, somebody who actually does want to foreclose on the property. And trust me, there's plenty of you out there. I'd say property investors represent 60% of our clientele. Sales and error. In Illinois, you can essentially file a sale and error for almost anything. If there has been a lawn mowing by the city and they've placed a lien on the property, we can file a sale and error. So we will expose reasons to essentially get the principal out of the property if you don't want to move forward with foreclosure. The liens will always remain to cloud the title. We do what we call payment plans and postcard mailings. That is a quarterly process where we send out, well, it's grown. It's now about 25,000 postcards every quarter to the homeowners of the properties we have liens on. And we negotiate terms to get the liens paid, whatever. So even if you don't move forward with foreclosure or consider any of these other options, the liens will still redeem. We have liens that are as old as our company that still redeem. So it's not the end of the world if the liens aren't redeemed and you don't want to take any of these other options and you just want to ignore everything. Let them redeem at their own time, their own pace. And then finally, you can partner with PIP. If you foreclose on, I believe it's 3 liens in your portfolio, PIP will partner with you on the fourth. That way, PIP's got some skin in the game as well, and it tends to give clients a heightened comfort level when considering their foreclosure options. So again, we're not going to talk about these in great detail. We do in those private re-education broadcasts that I mentioned, but we don't share those broadcasts until we're at about the 2-year mark of your investments in Illinois. All right, getting started. Very easy. If you just go to our homepage, or any page on our website, you'll find a link for forums and brochures, and you can download basically anything you can imagine with regards to getting started on your investments in Illinois or anywhere else. You'll find our agency agreements, our fee schedules, instructions per state, instructions if you're using a self-direct IRA, you name it. And if you can't find what you're looking for, you can always give our office a call. The phone number is there, my email is there, and our website is there. So tons of resources on the web. Obviously, you got this webinar by visiting our website. Everything is there for you. But if you need anything, it can be a bit of a undertaking to get through all the instructions and the forms that are necessary, especially if you're a self-direct IRA customer. So we are here to help, and we'll be happy to assist you in walking through those forms and answer any questions you have. All right, you guys are seeing a lot of facelifts and changes internally and externally with PIP Group. And just want to give you a heads up that there's a lot of additional webinars coming soon. We're going to start with this educational series first, and then there will be more that will follow on specific criteria, examples, client interaction, that sort of thing. So take a look at all the webinars. Investing in Georgia tax sales and bank foreclosures is one of my personal favorites. But everything is free. Everything is strictly educational. There's no heightened attempt to sell you anything. We're just providing the information for you, and you go make your own decisions. And finally, if you don't want to bother with the webinars, I hope you do, because we try to give as much information and content to make you as knowledgeable an investor as possible. If you don't, or even if you still do, go and download our free copy of the Beginner's Guide to Investing in Real Estate Tax Liens, Tax Deeds, and REOs. Again, you'll find that link on the homepage of our website, as well as throughout the website. If you want a hard copy, you can just email me, and we'll be happy to send you one. We've got them in the office. It's an 88-page 5x8 handbook, so we'll be happy to provide that to you. Just give our office a call, or you can email me directly, or you can download it online via a PDF. There's more examples in there and a little more detail than what we're able to provide in these singular broadcasts. Thanks so much for paying attention and watching the Illinois broadcast. We look forward to speaking to you more and hope we can assist you with your investments in Illinois tax liens. Thank you.